All right, greetings everybody. Welcome back. Welcome to another weekly Wednesday discussion. Chris here, bringing you another topic to talk about. It is currently Wednesday, and we are diving on into it today with something called the Ichimoku. It's a fun word to say. Full name actually being the Ichimoku Kinko Hyo. Many of you have heard about it and have been deterred from possibly learning more about it because it looks so darn confusing at times. So it's my goal today to talk about the Ichimoku. What is it? And maybe demystify it a little bit and possibly even entice you to add it to your trading arsenal. Either way, the information's there, and we want to stimulate that brain as we always do on every Wednesday. So thank you for joining me again, everybody. I do appreciate it. Without further ado, though, we're going to go ahead and dive into our disclaimers to get things started off as we're always required to do. We're going to do that. They have not changed at all. Every word of these is exactly the same. So I will leave them on screen for a brief period of time, and then we will be on our way into that juicy material that follows. So bear with me, and off we go. Hopefully everybody's having a nice trading week and not turning into a popsicle. The weather's actually even cold down here in Florida at the moment. It's quite exciting. I think we were down to like 41 last night, and that's Fahrenheit. But nonetheless, that's cold for us. It's cold for us. I know a lot of the country right now is quite frigid. So hang in there, everybody. Get your blankets out. Get your coffee ready. You know I like my coffee. Actually, I finished my first cup a little bit late this morning, a little bit before we got going here. So I'm actually in need for cup number 2. 2 cups is always my magic number. Moving along here, but it's all right. I'll survive. Don't worry about me. I'll just drink some water in the meantime. All right, moving along. Moving along. All right, this will be the last one, so congratulations, you have survived. Well done indeed. Survive the disclaimers. All right, let's dive into it. Well done, everybody. Well done indeed. Okay, back to our wonderful screen here. So today's subject, today's topic of discussion, today's reason for all of us coming together and, you know, just kind of putting our brains in a healthy state to learn and grow, all that good positive stuff, right, is going to be the Ichimoku. The Ichimoku is a technical analysis-based indicator. It is something that is based on historical data, but it is actually predictive in nature, or attempts to be anyway, by plotting things out ahead of time using that historical data. So it is something that is valuable to those that find value in these type of indicators. But we're going to talk about exactly what it is and all that other good stuff. So let's go ahead and switch on over now to the charts without further ado. So here we go, moving her over. And as always, just for the sake of showing how to access some of these indicators on the Finmark platform, as many of you are using, I do like to do that. So I'm actually going to delete this indicator and show you how to add it fresh right now. So let's start fresh here. Okay. So if we were looking at naked charts right now, and once again, this is the Finmark platform. If you are using something different, the way you're going to access it obviously may be different. So, you know, you'll have to figure it out with your own platform there. But it's generally going to be located in the indicator section of pretty much any platform. So with Finmark, all we're going to do is go up to our handy dandy little show indicator options button up here in the top center of the screen. It is one of the most center things on the screen at the top anyway. So this little chart icon, when we click that, this is how we've always added all of our indicators, and this is no different with the Ichimoku Cloud. So after clicking that, we're going to see a couple things here, or a few things anyway. So on the right-hand side, we always have our active indicator section, and this is going to be under a period of sections. We're going to have 1, 2, 3, 4, 5. At the moment, you only see one because there's only one section on my chart. If I were to add another section, it would look something like this. And now I have a section 2, and I have a whole different plethora here of indicators, a whole different selection that I can choose from to apply to section 2. And the reason is, the section 1 has candlesticks on it. So we're limited to indicators that can be applied to overlay candlesticks, like a moving average, for example. Ichimoku actually is one of them as well. But you're limited to the indicators that can only be applied on top of the candlesticks, because the candlesticks are representing section 1. Section 2 is going to be, as you see, a division in the charts, which we can stretch up and down, but it gives us another area that's not directly on top of our candlesticks to plot indicators. And the majority of indicators are not plotted directly over price, but instead it's some type of information that is provided to you wherever you prefer it, generally at the bottom of your screen. But I digress. So as we take a look at this, we're not going to use section 2 today, but that is how you do it if you're interested. We could apply the Ichimoku to section 2, but that would be quite useless, really. So nonetheless, we're going to go ahead and apply it to section 1. We're going to click on the candlesticks, make sure we have section 1 highlighted. And then we're just going to scroll down over here in the center corner, the center of the screen. And we're going to click on this Ichimoku button. Right here, we hit Ichimoku, 1 click, and it's going to apply that Ichimoku right underneath the candlesticks. Now, if we close this out by just simply clicking the hide indicator button, the same way we open it all up, just like that, now we're going to be presented with this big, crazy, colorful, you know, just myriad of things going on here. We've got all kinds of lines squiggled about, and at first glance, you're like, oh my God, what have we done? This is something that does deter people an awful lot. They get very, very hesitant with Ichimoku because it kind of muddles up the charts a lot. Now, before we go any further, I want to let you know, if you want to remove or hide some of the indicator options on the Ichimoku, granted there are 5 of them, so to speak, 5 lines that are being plotted and or shaded in, you absolutely can do that with a lot of platforms. This is just a little aside. So as we go forward and you say, okay, well, this might be the only line. For example, if this blue line was the only line that you're actually interested in using and you didn't care about any of the others, you could actually get rid of the others if you so choose, okay? So that is something that's common to do. Now, I generally don't recommend it, just because if you're going to use Ichimoku, you might as well use Ichimoku. And all of these lines, seeing them actually does have value. As you'll see today, we're going to go through a couple different strategies that we can use Ichimoku for in regards to finding entry positions on the charts. And for what it's worth, if you didn't already see in the top left-hand corner of my screen, I currently have the E-mini S&P 500 on screen. If you're trying to follow along, it is a 15-minute chart at present time, 15-minute candlestick chart. So we have the Ichimoku on screen. And as we are looking at the Ichimoku, there's going to be a few things that we'll talk about. Let's open up the indicator option real quick, just to show you how you can adjust your colors and settings in case you're trying to make yours match mine exactly. So if we open this indicator page back up, We come over here to this cog wheel that's by this word that says Ichimoku at the right side of it. We click that cog wheel. It's going to pull up a second screen, and this is where you're going to see things that I'm going to talk about in just a moment, where you're going to see the Tenkan-san, the Kijun-san, the Senku span A, span B, and the Chiku span, okay? Bunch of words that are, you know, maybe a little intimidating to pronounce because, you know, they've got a different origin than, you know, than something you might be familiar with, I suppose. But nonetheless, these are all of the different periods that we can adjust, okay? These are all the periods that we can adjust. And you see we have a 52, a 26, a 9, et cetera, et cetera. And all the colors down here, if I wanted to change any of these colors, I would just click this color box, and I can set it to any color on the spectrum there. So I'm not going to change anything in the moment, so I'm just going to go ahead and cancel out of this, and I'm going to close out of this, and we're going to go back to these charts. So once again, that's how you're going to change your colors if you want to make them any different. You want to make them match mine, or if you want to make them, you know, whatever it is that you're using. You know, if you're, it doesn't matter. No big deal, but that's how you do it. So now we're going to move on to what in the heck Ichimoku is and what are we looking at, okay? So the Ichimoku Cloud is what we're looking at. The full name you'll hear people say occasionally. It's rare that you hear the full name pronounced, but it's Ichimoku Kinko Hyo. Okay, Ichimoku Kinko Hyo. And if you're looking to type it into Google or you're trying to do a little bit of more research on yourself, it's spelled Ichimoku. Whoop, no E. I'm typing sideways, so I do apologize. Kinko Hyo. There we go. Ichimoku Kinko Hyo. That is the full name, or also, we'll do AKA Ichimoku Cloud. Okay, so either one of these words will get you where you're looking to go. So the Ichimoku Cloud, all right, what is this? What is this? Oh, where's my D? There it is. The Ichimoku Cloud, okay? The Ichimoku Cloud itself is the word that was given to describe how we kind of have these clouds that are formed with the indicator itself. You'll see as you got this red shaded box and then this green shaded box, that's where that cloud word comes from. It's basically a shading in of a distance between two moving averages. That's how we can think of that. But nonetheless, so the Ichimoku Cloud itself, as we're looking here on the screen, is a type of technical analysis, obviously, because we are measuring off price historically. So it's a type of technical analysis that is often simply just called the Ichimoku, okay? It is based on Japanese candlestick charting to predict future price movements. So obviously we have some Japanese candlesticks on screen, and the idea here is the indicator is using the information provided by these candlesticks to predict future price movement. So it wasn't until around the 1960s when Ichimoku actually came to the attention of the public, when a Japanese journalist named Ichimoku Sanjin, okay, also known as Goichi Hosada, released it publicly after 3 decades of perfecting it. So it wasn't released until the 1960s to the general public, but it was something that was worked on, or it's told that it was worked on for somewhere around 30 years before he actually released it. And the idea behind the Ichimoku Cloud strategy is to use a moving average based trend method to indicate where whatever it is that we're analyzing, in this case the E-mini S&P 500, is likely to head next. Okay, so it doesn't matter if it's a stock or indice, or it doesn't matter what it is. The idea is it's using a moving average based trend method to predict the future. Now, in addition to price action, Ichimoku uses excuse me, it uses time as another element, and because greater data points are used, it is generally regarded as providing a clearer picture than the Japanese candlesticks themselves, okay? So we're going to kind of work our way through just the brief what is the Ichimoku and kind of how it works, and then we're going to dive into some of the strategy itself. So if you have any questions, once again, as always, definitely feel free to use that raise a hand button or ask the question in the chat box, and I will try to word your, or I'll try to find a way to insert the answer to your question into what I'm saying at the moment, so it's kind of seamless, hopefully. But so how does we'll talk about how the Ichimoku Cloud strategy itself, or how the Ichimoku works, okay? So the Ichimoku Cloud is designed to spot direction and momentum in order to help us make buy and sell choices a little bit more easily. And there are 5 indicators used with each corresponding to a different timeline, okay? So once again, there are 5 indicators being used here. So we essentially have 5 different lines, if you end up counting them out, that are used in conjunction with each other, and they're based on different timelines, okay? So the first thing we'll talk about is the Ichimoku Cloud. Okay, the Ichimoku Cloud. Now this is going to be the shaded in portion, both red and or green. Okay, so the cloud is known as the Kumo. All right, and that's what generally grabs your attention right away because it's the most noteworthy of the 5 indicators on screen because it's a shaded in portion. Okay, you got a red and you have a green, and those of you that are astute with color coordination probably already know that the green is going to be some kind of bearish, or some type of bullish, and the red will be some type of bearish, but we'll get into that shortly. So when price is above the cloud, okay, so when price is trading above the cloud, like you see on the right-hand corner of your screen over here, okay, when price is above the cloud, the trend is generally considered to be positive, okay, simply put. And when price falls below the cloud, all right, as we had it over here, the trend is generally considered to be negative, okay. And then when price action takes place inside the cloud, all right, we're generally considering a flat trend and or some type of range, and that's usually when we're not looking to execute while price is continuously trading inside a cloud. So that would be an example of, let's see if we can find an example of where it was just kind of in it for a while. So price was a bit muddy here on this portion of the screen, where you're seeing it go from green to red to green to red. This is a pretty muddy area of the market. As you can see, price was trading right through it, a little above, a little below, but the cloud was quite small, nothing overly powerful here, switching back and forth colors, and price itself was spending a lot of time inside the cloud. And you'll notice that when we go back to present time, or when we look at the market when it's trending, price is hardly ever actually in that cloud. Okay, so that's the difference just right off the bat of what a trending market will look like in relation to the Ichimoku versus what a trending, or what a sideways trending market, a range bound market would look like on the Ichimoku. Okay, just so we know how to spot that right off the bat. Okay. So the next thing that we're going to talk about with the Ichimoku Cloud, let's get over here again. So the next thing we're going to talk about with the Ichimoku Cloud is leading span A, which is also known as Senku span A, okay? So when the share prices rise above span A, or the price of the E-mini S&P 500, or whatever it is that you're looking at, when the prices let's get those words together. When price rises above span A, the top line acts as support while the lower line acts as a support level. Okay, so span A itself is going to be this green line here, okay, that we're moving along on. All right, so if we go back to our settings here, this will actually be an easier way so you don't have to remember all this. If you ever pull your settings back up, you're going to have a Senku span A. That's how you're going to find it. It's a green line because I have mine set to green. But Senku span A is going to be a green line as you have here. Now, where do you think span B is? Well, it's right next to it, and that's going to be a red line. So pretty simple stuff there. Nothing overly outrageous. Simple to understand if you ever forget which is which. Okay, you can always go ahead and check yourself. So this green line here, this is going to be Senku A. Okay, this is going to be our span A anyway. Simple, keep it simple. And then our span B is obviously going to be the opposing side. So the other edge of the Kumo cloud, okay, once again is here, is going to be span B. All right. So when span A, okay, is above span B, which it is here, green above red, the uptrend is generally considered to be strong. So that's the first read that we can just automatically get out of this by paying attention to this cloud. We'll talk about others. And then conversely, when span B, okay, when span B falls below span A, the downtrend is strong, okay, generally represented by a red cloud. So here we are, okay. So once again, we have a green cloud, generally speaking, we're going to have a bullish trend. When we have a red cloud, we're expected to have some type of a bearish trend, or there's some reason that we're anticipated there, okay. Obviously, it's not going to be fail-safe. There's other things that are going to come into play, and we're using more than just that as we continue deeper, okay. So the leading way to using span A and B, the lines themselves, okay, remember the green line and the red line, green being A, red being B, okay, they are plotted 26 periods ahead. So if this was on a daily chart, it'd be 26 days ahead, et cetera, et cetera. And because we're on 15-minute chart, it's 26 15-minute bars ahead. So the idea is, as you can see here to the right, they're actually plotted out a tad bit so to give us an idea of what to expect price will do. Now, this is something that you'll see will adjust and change based on current price. So it's always going to be adjusting the future based on what is currently happening, all right? So it's going to continuously try to make itself a little bit more relevant, a little bit more active based on the current momentum and action that's going on in the market, okay? So the cloud is defined as the region between the A and B lines like we talked about, okay? This is otherwise known as A and B, Senku span A, Senku span B. Now, both current support and resistance lines, as well as a potential future support and resistance lines created by these, are identified by the cloud edges. So it's the edges of this that we're interested in. And a lot of people will automatically get confused and think that when price falls into the cloud, that's what we want. Realistically, that's exactly the opposite of what we want. When price is inside the cloud, that's usually not good, and we usually aren't interested in executing based on that. So usually you'll notice when the price is inside the cloud, we're getting some type of muddy action, and we're getting some type of slippage or flip between, you know, the bulls and the bears or something along those lines. So we're never really looking to execute while price is inside. Instead, what we're looking for, if we're just looking at a cloud read, is we're looking for support to be built on top of span A or on top of span B, depending on which relation that the market is in relation to it, or where the market is situated in relation to it, okay? So if we're underneath the cloud, okay, if we're underneath the cloud, then we're probably going to be interested in looking for some type of resistance either at span A or span B. But once again, it's not inside the cloud that we're interested, generally speaking. It's off of one of the lines that we're interested in. So don't overly get, you know, too drawn into the shaded in portion, because that can be quite deceiving. All right, it's the lines themselves, it's the edges of the cloud, whether it be one edge or the other, that are generally much more valuable to us as traders than they're just big colored area, because that big shaded color area can become quite large when the market is really moving. Okay, so when price changes, or just when prices change, the cloud or the Kumo, as you know it, changes height and shape, which in turn affects those support and resistance levels. Okay, so large price movements form thicker clouds, creating stronger resistance and support levels, while the cloud height generally signifies the extent of price volatility. Okay, so the wider the cloud is, generally the more volatile a price is. When the clouds are thin, support and resistance levels are generally viewed as being weak. So the bigger the cloud, the wider the cloud, usually the stronger the expectation of support or resistance when it is formed will be around either of these levels. So a big fat cloud, that's what we want if we are looking to anticipate some support to be formed at Senku A or Senku B, okay? Or span A or span B, I should say. But nonetheless, okay? And then obviously when it's thin, we're generally expecting price to be able to pierce through those a lot easier, and we're not anticipating them to be as strong, okay? And the bottom line, just to remember and to understand, is Senku span A or leading span A, however you want to call it, okay? Both of those are correct. When it rises above span B or leading span B, once again, whatever you want to call it, the trend is considered to be bullish, and that is this situation here where A is above B. We're considering it bullish with price also above that. And then the bearish view of the market is just simply going to be when A or span A, once again, same situation, we'll just go back a little bit, falls below B. Okay, and that's what we have here. So our green line is below the red line. It's now shaded in red because of that. Anytime the green is below the red, they shade the cloud in. The Kumo, they shade it in red. And anytime the green is above the red, they shade it in green. Now, once again, these colors are going to be subjective to however your platform chooses it, but you can make them any color you want. But that's the idea here. Okay, it's just important to understand what these levels themselves are. Okay, so another way that we can gain information that's valuable to us as traders is by getting an idea of how strong the trend is, okay? And we can get that from Ichimoku, okay? Simply just from the angle of the cloud alone, that is a valuable piece of information to us, okay? So the angle of the cloud itself can be used to gauge the strength of the trend. When the cloud is rising upwards at a steep angle, a strong bullish trend is generally evident. And then when the cloud is falling lower at a steep angle, generally a strong bullish trend. I'm sorry, strong, goodness gracious. But nonetheless, so when the cloud is falling lower, a strong bearish trend is usually in place. So once again, it comes into the same concepts as using a moving average, where if you have the moving average pointing upwards towards the sky, the sharper that moving average is pointing towards the sky, the steeper that moving average is pointing towards the sky, the stronger the trend, okay? The stronger the bullish trend, okay? If it's going up, bulls are buying, buyers in control, just think of it that way. And the same thing applies to the Ichimoku Cloud, okay? When the Ichimoku Cloud is pointing upwards, the steeper that climb, the steeper that angle with the Ichimoku Cloud pointing, generally the stronger the bullish trend. And then once again, when it's pointing downwards, of course, obviously we've got ourselves in a strong bearish situation because the market is diving and diving quite quickly. And the faster it's diving, the stronger, obviously, we consider the strength of the sellers, and probably the less likely that we are to want to go ahead and get in their way if we're not, if we're not anticipating already taking advantage of some of that momentum and riding down there with them. But nonetheless, okay. So sometimes the clouds, okay, these shaded in portions, they will form behind the price action, and these are known as Kumo shadows, okay? So the shadow is going to be when that cloud is going to have price obviously somewhere inside it, and that's generally a time when we don't want to trade during the period while it is just directly trading inside, okay? So there's a few different ways that we can form strategies and all kinds of other good stuff off of this. And we're going to start talking about that now, okay? You're going to find if you start getting really deep into, if you start getting really deep into Ichimoku strategy, there's a lot of different ways to interpret it. And we're going to talk about some of the more simplistic variations of getting in. But the most important thing to cover on the ground is just really what the Ichimoku Cloud itself is telling us, okay? So we know that when the overall trend is up, the price is generally going to be displayed above the cloud, okay? So when price is displayed above the cloud, we view the trend as bullish. And when price is down below the cloud, we're seeing a situation where we're being presented with a seller's market, okay? So when span A is rising above and leading span B, this confirms some type of an uptrend for us, and the space between the lines is generally colored green, obviously depending on your indicator. And when span A is falling below span B, this helps confirm that downtrend. And it's often for traders to use the cloud as an area of support or resistance depending on the relative location of price at the edges of the cloud, okay? Once again. And it's very common as well for traders to use other indicators with the cloud itself, like RSI, okay? It's very common for RSI to be paired with Ichimoku. If you're good with RSI, then you can already understand some of the value there. Just to, once again, RSI stands for Relative Strength Index. Using RSI in conjunction with some of these price movements that are being displayed by the cloud can help us get a better picture of the strength of a bullish or bearish event and give us more confidence as we buy or sell. But nonetheless, okay, there are some differences between the Ichimoku Cloud and moving average, just simply put. And the Ichimoku Cloud uses averages, okay? So the Ichimoku Cloud uses averages themselves, and they are different than a typical moving average because it's an average of things instead of just an average itself of last location of price by itself. So a simple moving average takes closing prices, adds them up, and then divides that total by how many closing prices there are, okay? That's just simply an average. Take the total number of things, divide by the number of those things, and there you go. And a 10-period moving average, the closing prices for the last 10 periods are added together, then divided by 10, right? Simple concept, okay? Now, the calculations for the Ichimoku Cloud themselves are different. They're based on highs or lows and then divided by 2. So the Ichimoku is taking advantage of highs and lows, not just every single price and location, right, in and of itself. So it's taking advantage of the highs and lows and then divided by 2. That's one of the common differences between a simple moving average and the Ichimoku Cloud itself, okay? But now we're going to go ahead and dive on in to some strategy options here, okay? So let's do that. This is a little bit fun. This is where we get some of that practical application. We talked about what the Ichimoku is, where it came from, and how to understand the lines and everything that we're looking at. But we're going to get a little deeper here. So we basically talked about the cloud, and I didn't really mention any of the other lines, okay? So there's a couple things going on here, okay? So we have a yellow line or goldenrod, whatever you want to call this color, okay? And I also have a blue line that's moving along. And I also have this gray line, which does tend to get quite a lot farther away from price. So we're going to talk about each one of those. So first things first, this gold line, okay, the gold line right here, we'll talk about that because it kind of stands out the most on my charts. This gold line is going to be called the baseline, okay, the baseline. And that's going to be, on my settings, going to be a 26 period baseline, all right? So it's going to follow price, but not as closely as the blue line. The blue line is closer because we're going to call that a 9 period we're going to call that a 9 period conversion line, okay? So the blue line is going to be known as the conversion line. The gold line here is going to be known as the baseline. So right off the bat, you're going to notice some flops that are happening here. There's going to be times where the gold line, like right here, for example, the gold line gets above the blue line, or the blue line crosses above the gold line, et cetera, et cetera. Those are going to be areas of significance, and that's why I'm pointing them out, okay? And then we have something else going on here with this crazy line over here, all right? And we call this the lagging line. Okay, we call this the lagging line. Now, there's other words for it as well, but we're just, for the references here, we're going to call this the lagging line. The lagging line is going to be a line that is going to get quite far away from price, and this is going to be based, obviously, on historical data and an attempt to kind of anticipate current location based on previous price movements. Now, when the lagging line, okay, when the lagging line is above price, that is considered a bullish market. Okay, so when we have this gray line here that's above price, that's considered bullish news for us. And when it's below, okay, when it's below price, that's considered bearish news, and we're on the lookout for selling. Okay, that's going to be the first just kind of telltale sign that we're going to look at when we look at the cloud. But aside from literally looking at the cloud and saying, do we have green or red going on right now? Okay, so that's another thing that we're going to pay attention to. So once again, when we have the cloud, it's shaded in green. We have span A above span B. That's one sign that the market's bullish. Then when we have the lagging line above price, that's another sign that the market's bullish. Now, the third thing that we're going to do or pay attention to get some executions out of the market is going to be paying attention to the baseline and the conversion line. Okay, so the baseline, once again, we can think of base as the bigger line. We can think of it as the bigger moving average. Think of it like that. All right, the baseline and the conversion line. The baseline is always going to be the one that's slightly farther away from price. It's not going to spend as much time directly magnetized to price because it's a larger average, right? It's not going to follow prices closely. The smaller the moving average, the closer it's going to associate with price. Well, the baseline and the conversion line, okay, the crossing over of them, they're kind of always in this state of dancing with each other. One's on top, then eventually one will go on the bottom. The cross is what we're interested in on, all right? And this is one of the most common Ichimoku strategies, and when perfected, definitely has some potential behind it, right? Okay, so as the baseline, okay, as the baseline falls below the conversion line, or the other way to word that, it means exactly the same thing, when the conversion line crosses above the baseline, okay, so right here. So once again, we have the blue line, which is the conversion line. When it crosses above the baseline, which is the gold line, as we cross above, we're being given a shorter term buy signal, okay? We're being given a shorter term buy signal that is already in conjunction with our other information being given to us about a bullish market. That means span A is above span B, price is above the green cloud, okay? So that's bullish, that's good. That means we're anticipating buying. We're getting a cross of these lines here. So once again, that's good for us, we're excited. And then we go ahead and check our lagging line up here. And our lagging line is above price as well. So once again, a third confirmation about a bullish market. And now we have a logical entry location based just on this cross right here. So this location, right, we'll do a, we're going to do we'll do a light purple box. I'm trying to do a color that's not already on screen to make it easier. So right here would be an example, okay, of executing a buy based on a cross over, okay? We're watching the conversion cross over the base while the situation is being presented as bullish by the cloud with the span A above the span B, as well as the lagging line being up high above price. That's a situation in which we're looking for buying. So basically we can think of it as we're not just simply looking to execute into the market every time we see a cross, because there's going to be a lot of crosses that we want to filter out. And we're filtering them out based on the cloud itself, the situation and the read that the cloud itself is giving us, as well as the lagging line, okay? So we're interested in only executing our entries, our buys or sells, when we are jumping in and all of the other components align. So when the lagging line is above price, we are only looking for buys. And we're only looking for buys, and we're only looking for buys as well when price is in a situation with the cloud that is conducive for a bullish market. So the first two things that need to line up is we need to have a lagging line that's above price, and we need to have a green cloud, okay? So we need a green cloud, and we need a lagging line above price. If we have those things, the only thing that we're looking for is buying. It's that simple, right? Obviously, trading gets more complicated than that, but that's the concept that we need to understand with the Ichimoku Cloud. So if lagging line is above, if you want to think of it like a computer, if the lagging line is above, we can only buy, okay? We don't even have to go any further because there's no situation in which we're going to say the lagging line is above just for the sake of this simplified strategy. There's no situation in which the lagging line is above that we're ever going to sell. So if the lagging line is above, we're only looking to buy. But the next step is if it's above, we have to also check if our cloud is green. Okay, basically if our span A is above our span B. So step one, where's the lagging line? If it's above, we're going to look for some buy opportunities. Step two, is the cloud green? Okay, is the span A above the span B? If the answer is yes, now we're just going to look for an opportunity when the conversion line crosses above the baseline, okay? And when the conversion line crosses above the baseline, we're looking to jump into the market for that buy. And at this point, okay, there's a few variations that people can use in regards to a stop loss, okay? Some people will use the baseline, okay, once again, the one that kind of stays a little bit farther away from price, they'll use the baseline as a trailing stop location, okay? So as price rises, they will use this line as a decision point to get out of the market, okay? It's not going to move on a perfectly scaled, it's not going to move in perfectly in sync with price at an exact ratio. You know, basically, it's not going to always say 15 points away or 15 pips away, depending on what you're trading. It's not always going to be exactly the same distance away. So what people will do is they'll watch their charts, they'll pay attention, and they will exit the trade as it comes back down manually to this location. So that is an option to set a stop loss also based on the Ichimoku. Another option, obviously, okay, because once again, we're already knowing how to get into the buy. Another option is going to be to exit the position when we encounter another cross, okay? So another cross would be something like this over here. So over here on the right-hand corner of the screen, we'll color this one in with a red box. So hold on a second there. All right, so right in this red box, and if these are hard to see, guys, I am sorry, but right in this red box here, this is when the conversion line actually crosses back below the baseline, because you see here the blue is falling below the goldenrod. When we cross back below, that can be an indication that the market is starting to lose some of its bullish pressure and we want to get out, okay? Even if at that point we're still in a green cloud, even if at that point the lagging line is still above, that's still a preemptive way to lock in our profits and get out of the way and say, hey, we found a nice opportunity in the market, we took advantage of some momentum, and we got out of the way. That's just another way to do it. Well, obviously, it's going to come down to trader preference. It's going to come down to demo, executing, practicing, and understanding what is going to be the method that best works for you. But these are all very common methods that traders do use and that traders have absolutely found success with, okay, at times. It's all going to be dependent on how you interpret what the market's doing, okay? I've seen traders find amazing success and swear by the Ichimoku, and then I've seen others that just simply cannot understand it, and naturally they just can't do well with it because they just don't understand. So it's one of those things, just like literally anything else in life, you have to use it, you have to try it out, you have to be willing to understand it to make it what it's worth. So you got to decide what it's going to do. Obviously, it's something that was worked on for 30 years and something that was released to the public. So there's, that information alone should tell you that there is some value behind it. But nonetheless, it is going to be personal preference. And once again, I'm not pushing anything, saying you need to do this or need to do that. It's only my goal to present to you information and report to you what other traders have done and what they have found success with and how were they able to find success with it at times. And then you do with that information, obviously, what you will. But so one of the ways that we get into the position, once again, is, and my favorite way to get in using the Ichimoku is essentially exactly what we're talking about. We already talked about some other ways technically to get in by just simply using the span A as an area of support and jumping in if we're finding support on top of it, okay, which would actually be at the same location as our crossover here. That's one of the simplistic ways, but if you want to have all those layers of filtration, we're looking for a crossover to happen when all of the bullish criteria is already there. That means when we have our green cloud and the lagging line is above price. So that's what we want there, okay? And that gives us a way in. And our way out, we have a couple ways out. Once again, we can use a trailing stop, which would just simply be the baseline. So whenever price comes back down to the baseline, that's when we're going to be looking to jump out. Or we can wait till the conversion line crosses below the baseline, then we can go ahead and get out that way. Or we can also use just common price action and price knowledge. If we're noticing heavy resistance building, for example, like we were noticing up here, and then the support that gave us this high was all of a sudden broken, then we might want to be on the lookout for some bearish control entering the market, and we might want to get out for that reason. But those are just some different ideas on, different methodologies and reasonings for why we'd want to get in or out. Now a sell, okay, what would a sell look like? It's exactly the opposite of what we were talking about. So let's go ahead and see if we can find ourselves a good opportunity here with some bearish market activity. We had a lot of bullish market for quite a while. We got muddy here, but no, so I don't want to use that one just as this one would have resulted in a nice opportunity, but it's such a steep, sharp fall. It's not going to be a great textbook example, but it is something that using this strategy definitely could have resulted in some profit. But let me see what we have here. All right. Once again, this is only 15-minute chart, so we haven't really gone back that far. But the concept with the sell is going to be quite simple. So with the sell, we have a very muddy period of price here. But with the sell, the concept is going to be we need a red cloud present. That means, folks, we need our span A below our B. Okay, when A is below B, the cloud will be shaded red. When A is above B, the cloud will be shaded green. So we need a red cloud, and then we need a lagging line below, kind of like you see here. So we need a lagging line that's below price, and then what do you think we're waiting for? We're waiting for the conversion line, right? We're waiting for the conversion line to fall below the baseline, okay? So we need the blue line to come below the baseline, which occurred as far as the red cloud and everything. The first time it happened was actually right here, okay? So right here, we had ourselves a situation where the conversion line fell below the baseline. We had a red cloud, and we had a lagging line that was below price. But it's, once again, this example isn't the cleanest one in the world. Just understand the concepts here, and it'll do you just fine. Obviously, the market is something just like everything else, folks. The market's always going to provide a series of opportunities. We don't have to take every opportunity. We can wait for the primetime ones, okay? It's patience, it's quality over quantity. The Ichimoku is something that can absolutely provide multiple trades throughout a day, depending on which time frame you're looking at, okay? But we don't want to force trades, and we want to cherry pick them, okay? We want to cherry pick them as with anything else. It's definitely more valuable and advantageous for us to take a few excellent trades versus taking a large quantity of mediocre trades, okay? It's a lot less stress. There's a whole slew of benefits that we could add in here, and we can simply take them when they are very clearly defined. When the cut, for example, a very clearly defined sell would be price is below the red cloud, not inside the red cloud, because right now, once again, we're generally not interested in executing when price is inside the cloud, green or red. So that's just not ideal. We already talked about this. But nonetheless, if price was cleanly below cloud, if the lagging line was cleanly below price, and we then witnessed a crossover where the blue line, okay, once again, our conversion line falls below the baseline, then we've got ourselves a situation where we've got a nice sell signal, and we'd be looking to sell off, and we'd be looking to get into the market short, and we can apply the same principles, okay? And if that conversion line then crossed back above the baseline, we could use that as an exit location, or we could do just common price knowledge, or we could say, hey, if the price itself comes back to the baseline, using the baseline as a trailing stop location, we can get out that way as well. So we've always got 3 easy ways to close out of a profitable position, okay? We've always got 3 easy ways. And generally speaking, a stop loss location, we didn't talk too much about that, but stop loss locations can be generated by using things like the cloud itself. We can say if the price is on the underside of a cloud, you can use the areas of support and resistance that are expected on the edges of the cloud as stop loss locations. So basically, the bottom edge of the cloud is going to be our tightest stop loss location. If price were to cross above that, our stop would be just above that. So if price began entering the cloud, we could get out. If we wanted to be a bit more aggressive, a bit more loose, we would say, okay, if our stop loss is going to be above the top line of the cloud, which would be the B span in a bearish situation, we could then use that as an exit point. Either way, the point is, understanding Ichimoku should be a lot clearer for you now, hopefully. And if not, you can always watch this back, okay? You can always watch this back and go through it. But Ichimoku is a fun indicator, and it does absolutely have the potential to provide some pretty cool opportunities, okay? It is just something, once again, just take your time. Don't make the opportunity happen. Just let them look beautiful and take it when it's beautiful. Let the trade ripen and then pick it. Don't pick it early because you think it's ripening at the moment. You don't want to miss the opportunity. That's going to lead to problematic situations, just like anything else in trading. And just like everything else in trading, folks, we generally don't find more trades by making a system that isn't able to produce more trades naturally. Do that. That's an unnatural expectation. Instead, we do it by knowing more about the market and knowing when we're spotting market moves that are conducive to different systems. And then by knowing multiple systems, if we know 5 systems and each of those systems only produces 1 trade a day, by knowing 5 systems, we now have an expectation of maybe hitting 5 trades a day or something along those lines. That's just the concept I'm trying to get across. So knowledge is power with trading. It always is. So just knowing little things like this, even if it only throws 1 extra trade in your repertoire a day, that is now 1 extra trade that you didn't have before. But thank you for joining me again, everybody. It is always a pleasure bringing to you another weekly Wednesday discussion. Hopefully, we stimulated that brain today and got you thinking about some stuff. So I appreciate that, everybody. Thank you for coming. I love all of you. Thank you very much, everybody. Have a wonderful Wednesday. Have a great rest of your trading week, and I will see the majority of you very soon. Over and out.